Good morning, friends. Welcome to the SBI Securities morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day as well as for the next few sessions. Now, yesterday we saw both the frontline indices Nifty as well as Bank Nifty opened with a considerable upside gap on account of the positive takeaways from the FOMC meet, wherein the Fed has hinted at rate cuts over the following year. Now, due to this, both Nifty and Bank Nifty sustained its gains throughout the day and finally ended with 1.3 and 1.5% gains respectively. Now, this dovish stance of the US Fed has also led to the key macroeconomic factors such as dollar index plummeting below 102.50 levels. US 10-year bond yields also have cracked below 4%. And along with this, Brent crude oil prices are also sustaining around $74-$75 a barrel. And all these factors have acted as a positive trigger from a liquidity flow perspective towards the risk on assets such as equity markets for both global as well as Indian equity markets. Now, coming to the global equity markets, on expected lines, S&P 500 has also continued its positive momentum and it has crossed 4700, 4720 levels. And going forward, we expect this up move to continue up to its previous life high zone and much above that towards 4850, 4890 with 4650 as key support levels in the days to come. Now, coming to Nifty levels, for the day 21,100, 21,130 zone could act as a strong support. Until this support zone holds, we feel that this current up move could continue up to 21,380, 21,450 levels. On the downside, if 21,100 breaks, then a minor profit booking move up to 20,950 levels, 20,900 zone could be witnessed. If we see the open interest data for the next weekly expiry, significant call writing buildup is visible in 21,300 and 21,500 strikes, while on the puts front 21,300, 21,200 as well as 21,100 puts all have witnessed significant open interest additions. Now this leads us to a range of say 21,050, 21,000 on the downside and 21,450, 21,480 zone on the upside for the next few sessions. Coming to Bank Nifty, which has been a big outperformer in the last few days, for this index, the key support levels now are placed around 47,500, 47,550 zone. Until this zone holds, up move up to 48,200, 48,250 zone could be witnessed. Above 48,250 levels, this current up move could continue up to 48,550, 48,700 levels. In case 47,500 zone is breached on the downside, then the next key supports are at 47,100, 47,000. From a weekly expiry perspective, significant open interest buildup is visible in 48,000, 47,800 as well as 47,700 puts, while 48,000 and 48,200 calls have added open interest yesterday. So this means that the near-term trading range for the Bank Nifty is placed between 47,500 and 48,500 on the upside with a positive bias. Now, coming to stocks and sectors which were in action yesterday and which could be in action for the next few days. Now, we all know that the banking sector has given a big breakout on the upside, and stocks like HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank all are outperforming, even IndusInd Bank now. So we feel that the banking sector could continue its positive momentum in the days to come. Along with that, yesterday one more sector has given a fresh breakout above its lifetime high, and which is Nifty Realty. Now this has been the best performing sectoral index for the second consecutive day, gaining almost 4% yesterday. And as we have highlighted multiple times in our past editions of the podcast, that real estate stocks are having the time of its life. So heavy accumulation at higher levels is also seen in DLF, Godrej Properties, Brigade Enterprise, Phoenix Limited and Oberoi Realty. And we feel all these stocks could continue its positive momentum in the days to come also. Even IT sector has seen a fresh breakout on the upside above its consolidation zone and has shown outperformance with excellent momentum. Now, both large caps and mid caps, both spaces have seen good traction, and we feel stocks such as LTI Mindtree, TechM, Infosys, HCL Tech, Coforge, Persistent, Birlasoft, LTTS, almost all the major stocks now have witnessed strong momentum on the upside, and it's a complete sectoral move. Just not a couple of stocks are moving; all the stocks are moving in tandem, and that's why we feel that this sector could continue its up move in the next few sessions. Coming to the cement stocks now, all these cement stocks have witnessed sectoral rotation in its favor, with specific buying seen in Star Cement, Ultratech Cement, ACC, Ambuja, Dalmia Bharat, and JK Cement. So all these six stocks look good from a positional perspective. And apart from all these three four sectors, banking, realty, IT, and cement, few other bullish setups are visible in individual names such as Bajaj Finance, Bajaj Finserv, M&M, then Hindalco, IRFC from the railway stocks, SAIL, Nalco from the metal space, then AU Bank, Poonawalla, Jubilant Food, Container Corporation, Hudco, Mannapuram. So all these individual names have also seen a good build-up on the long side in terms of price patterns and in terms of the derivative data positioning also. Coming to the FII DII data now, yesterday in the cash segment, FIIs have bought to the tune of 3,500 crores almost, and DIIs have bought to the tune of 550 crores. So both FIIs and DIIs have been buyers yesterday. Along with that, FII's long short ratio for the index futures has marginally declined to 56.93 from earlier 57.5%, as they squared off almost 3,300 index futures longs, and that is a negligible number at such a level of the index. Uh, on stock futures front, FIIs have sold closer to the tune of 20,300 contracts, while on the options front, FIIs have squared off 1.9 lakh call contracts, as well as they've squared off 1.8 lakh put option contracts. So, all in all, we feel overall from a Nifty standpoint, 21,100 will act as an important support. On the upside, we see levels of 21,400, 21,500 being achieved very soon. From a bank Nifty perspective, 47,500, 47,450 zone will act as a strong support, and on the upside, 48,300, 48,350 levels could be witnessed, and it would be an individual stock pickers market. So this is the best time of the markets. Try to cash in into the ongoing momentum, but just be a bit aware because a lot of stocks are even reaching their overbought zone. So have leverage under control. Try to keep your positions hedged, and add stocks in parts, and not in one go. So that's about it, friends, for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights from a weekly podcast perspective. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.